Do you wake up in the morning and feel sad straight away? You wake up and you look at your phone and the trades you left open turn all red overnight. You feel a deep pain in your heart, you're about to blow another account, and you start thinking that trading is a lie, nobody makes money, and you just want to quit everything right now. I really want to help you stop wasting time, stop losing money, more importantly, stop blowing accounts, and make your equity curve look like this. There are only two ways to lose money, and I assure you 100% that if you stop doing this, you will start making money and your trading career will change forever. And those two things are... Now for real guys, the two ways on how you can lose money is by having an inaccurate strategy and inaccurate implementation. In other words, know what to do and then do what you know. It's as simple as that. And that's why the bots that people create to trade their own strategy are very useful, because they know what to do and they do it. And that's it. They don't have any emotion involved when trading. They just execute and follow orders. Of course, we are humans and it's very difficult for us to execute as a robot. First of all, we need a trading plan. It's a series of rules and instructions that you need to follow in order to take trades according to your strategy. If we take trades that doesn't fully meet the criteria that we're looking for, it's probably going to be a bad trade. And even worse, if we take trades that doesn't meet any of our criteria and rules, it's probably going to be a very bad trade. So the idea is for you to follow what's inside of this circle every time that you're looking for a trade opportunity. I'm going to share with you the 5 most important keys to a trading plan so you can start your change for good. The first one is a profitable strategy. You need a set of rules to apply in a consistent basis your strategy over and over again. If you don't have one, you can check the link in the description to learn mine in my mentorship, or you can learn for free in my playlist with organized teachings. The next step is choosing a trading time frame that suits your needs and style. For example, I am a very impatient person. My style is scalping, and I scalp usually the 5-second, 15-second chart or the 10 ticks chart. And that's it, because I get the results very quickly and I don't have to wait much time. Also, how much time do you have during the day? Maybe you work between 9 AM and 5 PM and you won't be able to open or manage trade during this time of day. Ideally, you will have to backtest your strategy in such a way that you can put limits before work with a stop loss and take profits, or scalp after or before work. Trying to trade in the working hours is very complicated, at least that's my experience when I did it in the past. Now the next step is determine how much you want to risk in terms of percentage. And it's going to be based on what is your maximum drawdown and your win ratio. If you know exactly what is your win ratio, you can calculate the probabilities of having X amount of losers in a row. And based on that, you can establish a risk strategy in order to decrease the risk when you are in a losing streak and increase it when you are in a winning streak. And when this happens, you will diminish the drawdown and maximize the profits. So I recommend you to calculate what is the best risk parameters for your strategy. Now, this one is very important. We need to define a trade management strategy to answer these questions. When are we closing the trade? When are you extending the target? When to trade the stop loss and where to trade it? So for example, in my case, in my strategy, I trade my stop loss according to the reaccumulations that I see in terms of Wyckoffs. For example, if I have an accumulation here and my ideal target is a high that I have here, then when price breaks the trend range and starts the phase E of Wyckoff, basically when it starts making higher highs and higher lows, I will start moving my stop loss according to these higher highs and higher lows. I have specific rules for this. For example, if this higher low here have equal lows, then I won't probably move my stop loss here, because it's possible for price to come back down here and then continuing higher. So avoid the points where there is liquidity pending to be taken, or basically where buyers were induced, because this move up could be only an uptrust to grab more liquidity and then continuing higher. In any case, I also mark my invalidation point. Let's say that we have a distribution here. I'm speculating that price is going to go above this high. However, I know it's possible for price to touch this level and continue going lower. So if I am wrong, then this is likely going to happen, and I'm going to be very aware of what is the sign that price is showing me here. If it's developing a distribution, then I will probably get out of my trade and then try to find entry if there is any entry. So basically we need to adapt our trade management to what is the current order flow of the market. Only if you have the time to be in front of the charts. Maybe you don't have time, and in that case you can maybe set a partial before it hits your invalidation point. So in any case, try to find ways to maximize the profit without putting your account at risk. And remember that a small win is always better than a loss. There is something very important that you need to understand about risk management, and is when we take a decision to hold the trade until it hits the TP or take profits, we need to reevaluate what is the risk to reward ratio that is going to be produced when we take the decision. So for example, let's say that we take this trade and the ideal target is about 5 RRs. But now price is currently down here, is sitting at, for example, 3 RRs. If we take the decision of holding until it hits the TP or the stop loss, the best way to think about it is like if we were taking another trade, which basically implies that we are risking all of the profit that we are in from this entry to where price is now until the final TP. And as you can see, if we took another trade, it will be 0.75 RRs, which is less than 1. Is that worth it? Different story it is if the final TP, let's say, is up here, and now we will be risking the same profits, but now to make 1.5 RRs. So maybe in this case, it makes more sense. So adding this thought process to your decision making is crucial for long-term profitability. And the last step for your trading plan is journaling. You need to journal every trade you take to have a log of how good or bad you're executing the trades and learn from your mistakes. If you look for trading journals on Google, you will have many different options, or you can choose to do the simplest one, which is doing your own Excel sheet. And that's what I do because it's simple and I love Excel. There's nothing better than Excel. Annotate absolutely everything about every trade you take, why you took it. If it went well, then can it be improved? And if it went wrong, why did it go wrong? Did you follow the analysis and it was wrong because it's part of trading, or you broke the rules? And the idea is to improve from past mistakes and don't commit them ever again in the future. If you are interested in learning how to be a professional trader, you can check the link in the description to join my mentorship. We do 5 live sessions a week, unlimited one-on-ones for the lifetime members. We have trade ideas, we take trades live, we have a course, we have absolutely everything you need to know to apply our strategy and be profitable with it in your live account or a funded account.